Giles Harbour from DirectorsTalk, and I'm speaking today with Nick Chalmers, Director of Metals and Mining at Zeus Capital. Nick, good to talk to you.
And you. Good morning.
Now, you've chosen to initiate coverage on Bacanora Minerals. Why is that?
Well, we believe Bacanora offers high-quality equity exposure to the lithium market, which is a subsector which we think has amongst the strongest fundamentals of all the commodities in the natural resources space. Demand is currently rising over 10% annually, and there's a supply base that at the moment is struggling to keep pace with that.
Okay. So what's driving this demand growth?
Put simply, it's expanding take-up levels of fully electric and electric hybrid vehicles, demand for which is growing at double-digit levels annually. Historically, it's really been about glass and ceramics, which has been the bedrock of demand, overtaken over the past decade by portable, handheld, rechargeable electronic devices, the likes of smartphones and tablets, which use lithium-ion batteries, taking advantage of lithium's high electrochemical potential and low weight. But batteries for electric vehicles are substantially more lithium hungry than batteries for handheld devices. Just by way of example, a fully electric vehicle battery requires up to 50 kilograms of lithium. That compares with less than 5 grams in a standard smartphone on a weight equivalent basis. So the growth potential is obvious. Longer term, lithium may play a role in future large-scale renewable energy storage solutions. So that's an area of further blue sky demand upside potential for the longer term, but more speculative at this point in time.
Sure. Excellent. Okay. Are other companies queuing up to bring new projects on stream to service this growing demand?
Yeah, a number of would-be developers have unsurprisingly emerged over recent years promoting projects into this market, but it's important to understand that most of them have hard rock hosted resources, predominantly in Australia and North America, and we believe the cost structure of those type of projects are high, such that while they may be able to maintain a margin at current lithium prices, if they were in production today, they would struggle on any future weakening of lithium prices, and certainly would find it difficult to compete with the established producer oligopoly. In this regard, as a soft rock resource, we think Bacanora's Sonora project stands apart from the pack. It's got a cost structure that should see it positioned in the lower half of the industry cost curve towards the low-cost brine-hosted lithium producers.
Okay. Is lithium currently produced commercially from such deposits?
No, Bacanora will be the first to produce on a commercial scale from a soft rock clay-hosted resource. But the company has been operating a pilot plant for the past 2 years that's successfully demonstrated the viability of every stage of the plant processing route, which we think significantly de-risks the project. It's also facilitated the production of sample battery-grade product for testing by would-be off-takers in Asia and Europe. Agreeing off-take terms will be another key de-risking event. And it's important to understand that not all lithium projects are capable of producing battery-grade product. We know from the pilot plant that Bacanora's Sonora project can.
Excellent. Okay. What earnings levels do you forecast Bacanora being capable of for the long term?
Well, once both stages of the project are up and running and producing around 35,000 tonnes per annum of lithium carbonate, we think Bacanora could sustain annual EBITDA of $150 to $200 million. That'd provide an EBITDA margin of over 50%, and that's based on a conservative lithium price assumption of $7,000 a tonne. We believe current contracting pricing is around $8,000 to $9,000 a tonne and trending higher.
Excellent. Okay. So where does Bacanora's market valuation sit versus its peers?
It looks inexpensively priced at present, trading at around $14 a tonne of attributable resource versus its developer peer group average of just under $90 a tonne. And remember that most of those peers, as I said previously, have hard rock projects that will likely have significantly higher cost structures. For Bacanora, we estimate fully funded, fully diluted NPV for the stock of about 125 pence, and that's versus a current share price of 74 pence.
Sure. Okay. So what do you think the important up-and-coming catalysts will be?
In addition to securing the offtake agreements over the next few months, Bacanora is also aiming to complete a definitive feasibility study of the project by the end of the first quarter of next year. These two milestones will be key to arranging the debt and equity financing thereafter to begin building the project.
Great news. Okay. Talking to us today was Nick Chalmers, Director of Metals and Mining at Zeus Capital. Nick, thank you for speaking with Directors Talk today.
You're very welcome.